Good morning, Paul Georgie from Allendale. It's Friday morning, and grain markets continuing their downward path here, especially in the row crops. Corn set new lows overnight, soybeans weaker, mainly due to the forecast of rain next week. Many are calling it $1 million rain that the producers are looking for because it's going to make the crop. And right now, it looks like we're going to get this rain. It's going to be widespread, and it will be the rain that's needed to make this crop, and looks like a bumper crop at this point. The trade also is looking ahead as we start out the new month of August. We've got an August supply-demand report coming out on the 12th, so trade's looking at that already and trying to figure out what kind of yield is USDA going to put out. It looks like the trade is definitely convinced that we will see higher yields as we get closer to this report, and that the USDA will increase yield from July to August. On years where we have cool Julys, it is historical that they will raise it. The question is going to be is how much do they raise it? Because in our studies that we've done here at Allendale, it suggests that they will not give us the final or the biggest yield until usually the January report. So they will stair step up their production numbers likely. So we're expecting somewhere in the 168 to 172 range. Allendale's estimate actually is 174 is what our numbers look like. So we'll see what the USDA has to say on the 12th, and that's going to be a factor as we go forward. The other overnight news, China PMI numbers came out very positive, showing their economy is strong and stronger than expected. And that might be a reason why we've seen some strong export sales of new crop soybeans to China. They continue to be buyers there. In China overnight, we had soybean prices higher, but not able to carry through on the CME markets here in the overnight session. Wheat is the bright spot right now, and likely because of several reasons. One is the poor crop that French wheat is having. They've got good yield, but the quality condition is down, and that's being concerning to the trade, that they will not be able to meet their export commitments, and therefore buyers will have to come to the United States to get quality wheat. Another factor is the sanctions that the U.S. and the EU have put against Russia here this last week, that it impacts their export sales of wheat, because what it does is locks down the Russian ag bank from participating in global finance. So they can't finance the wheat and to exporters, and that will and could support the U.S. wheat market. So those are factors that we're looking at directly here in the grain complex. In the livestock complex, we've got some bearish attitude this morning in the cattle, as the stock market is weaker, and cattle traders have a tendency of following that direction in the markets. We are overbought in cattle, even with yesterday's sharply lower price and more technical selling. The key reversal yesterday in the nearby contracts of cattle and feeder cattle are causing some early continuation selling in the livestock complex. However, in cattle, we've got the fundamentals really haven't changed. We've still got very tight supplies of market-ready cattle. Show lists are less than they were a week ago. We've also have got product that continues to be strong. Yesterday we had choice beef up again 72 cents. So demand for product is good, and we're waiting to see what packers will pay this week. We're hearing bids are lower now than expected because of the weak price we've seen in the futures yesterday. The big advantage to both cattle and hogs that we see right now is that the futures are at a considerable discount to the cash market, which should provide some underlying support to especially the nearby contracts. In the pork complex, the extreme record difference between cash and futures will help the October contract of hogs and the hog complex find a bottom in here. They've been down and closed lower 11 out of the last 12 days, certainly oversold. Look for some type of a rebound there, a turnaround, and we expect that when this turnaround comes, it could be a sharp rally, as we still have the tight supply of hog numbers due to the PED virus early in the year that will impact total supplies as we go into mid-August through mid-September. So we're watching that very closely. A reason to stay in touch with Allendale's research and Allendale brokers. You can reach us at 800-262-7538. We wish everybody a very successful trading day, and we'll talk to you on Monday morning. Thank you.